Welcome to Man Does Tech, where I solve the problems you didn't even know you had.
In this video, I will compare Vanguard versus BlackRock full comparison. Start by focusing on the core differences in company structure and ownership. Explain how Vanguard's mutual ownership contrasts with BlackRock's shareholder model and why that matters. Highlight fees, fund choices, and scale impacts for everyday investors. Walk through typical investor goals and which firms' products better align with low-cost indexing versus institutional-oriented solutions. Compare costs and fund offerings step by step using plain language and clear examples. Discuss how small percentage differences in expense ratios compound over time and affect retirement balances. Point out Vanguard's emphasis on low-cost index funds and BlackRock's extensive ETF lineup, including niche exposures and smart beta strategies. Encourage viewers to consider personal time horizon, tax efficiency, and trading flexibility when choosing between these fund options. If you're finding this comparison helpful, please subscribe and like the video for more content. Quick recommendation: make meal prep easy with leak-proof containers that keep salads and sauces separate for stress-free lunches. I use them between portfolio reviews to save time and avoid spills, which somehow feels like adulting for investors. Check the description for the link and other deals. Now let's get back to the video. Explain governance differences in simple, relatable terms for investors seeking clarity. Describe how Vanguard's mutual ownership can lower conflicts of interest and how BlackRock's corporate structure supports broad service offerings and technology. Note that each firm's size influences market presence, product innovation, and client access to institutional tools. Offer practical questions viewers can ask themselves to match governance characteristics with their investing priorities.
Thanks for watching. If you found this helpful, don't forget to like and subscribe.